There is no secret pact between central bankers to start tightening monetary policy after all. The Reserve Bank of Australia was unmoved on Tuesday, keeping cash interest rates at 1.5%, and the language of its announcement studiously neutral. In the space of an hour, the Aussie dollar dropped 0.7% to 76 American cents. Now, few had expected the bank's board to increase what is, by the standards of developed world monetary policy, a towering short-term rate of interest. Yet the Australian economy, 26 years into the miracle of a recession-free expansion, is expected to grow another 2.6% this year. Markets have spent the last 2 weeks reacting to central banks talking up the possibility of a more restrictive approach. So a change of tone or language would have fed the narrative of coordinated central bank action. Instead, two conclusions stand out. First of which is the central role currencies are likely to play as policymakers try to finesse the impact of their words. The Reserve Bank has for years said that Australia benefited from a weakening currency since 2013, and that a stronger dollar that would complicate adjustment from the mining boom. The effect matters ever more so now that foreign exchange markets have become the fastest and clearest indicators of bets on monetary policy. In the last 2 weeks, the Canadian dollar has jumped the most against the dollar of the heavily traded currencies, up 2.6%, after policymakers signalled a first rise in interest rates in 7 years was imminent. A stronger currency, however, can hinder a fragile economic recovery, rendering policymaker plans moot. The second point is a reminder that wage pressure, a crucial factor in the acceleration of price inflation, remains absent in Australia and elsewhere. While the Reserve Bank said employment continues to grow, it added a caveat which should be familiar to American and European ears. It said wage growth remains low, however, and this is likely to continue for a while yet. Markets have been behaving as if higher inflation and tighter policy is just around the corner, but the evidence for the former, well, it isn't quite there yet.